Thanks for joining us here on a Monday. I'm Marlin Bohling with you as we watch our ag commodity trade. We want to welcome to the set, live and in person, Chris Swift of Swift Trading Incorporated. Welcome back.
Thanks, sir. Good morning.
You've been a little world traveler here.
A little bit, along the upper East Coast.
So Upper East Coast.
Upper East Coast.
I assume a little cooler.
Very nice up there. Very nice.
Okay. Quit rubbing it in. We're going to take a look at our grain trade here, and on the corn market, sign of a little firmer tone creeping in here again. And we kind of softened up after that Globex trade wrapped up this morning, and we only opened about a penny higher, Chris. But now we have September corn roughly about 3 cents higher, just changed to 2 3/4 higher at 441.5, and now December up 3 at 445 1/4. So right in the middle of our trading range here. If you look at the soybean trade, it had been pretty flat on the open, and now it's up 3.5 on August. We're at 879.5, and November now 3.5 higher at 898. So it's still under $9. It got up above it, up to 902.5 there for a little bit, and then came back below it again. But it's trying. Little engine that could, maybe, we don't know. So I'll stop right there. What do you think here on corn and soybeans this week?
There's a lot of discrepancies between what USDA came out with their acres planted and what private forecasters were. So we noted that maybe the boat was a little loaded to one side just before that report came out, and when it tipped the hand just a little bit negative, then we saw everybody just kind of wipe the slate clean, and by today we're right back up in 450 areas again for corn.
So do you think the trade really gives a flying leap about the report on Thursday now?
There may be some kind of information in there from a stocks report that maybe we had a little bit better usage or some more greater demand from exports, but I don't think it's going to matter too awful much until you get into August and we actually find out how many acres were really planted.
And by then, it sounds like
August, we'll have at least any pollination that is done. Then we'll be through with that. And I think, we're just not going to plant any more corn now. So whatever's in the ground now is there, and they'll come in with some kind of substitute for a silage crop.
And that's what raised some eyebrows last night, was that 8 to 14 day forecast, where they're talking kind of hot, kind of dry, right during that pollination time in the eastern corn belt.
It's had a dose of every kind of weather you can imagine this year.
And now we're talking possible tropical weather along the Gulf Coast.
I saw the rains this morning.
Boy, it's going to be one of those years. Let's take a look at our wheat market and see what's going on there. Currently in Chicago wheat, it's kind of caught in the crossfire here. We have September Chicago wheat down 1/2 cent at 514.5. And if you look at the Kansas City market here this morning, we now have September up a penny at 446 1/4. So not real sure which way to go here. And on the Minneapolis wheat trade this morning, we currently have just a slightly lower tone. We have September down 1 tick, and we have December down a penny. And Chris, I was just noticing we had the cotton market down about 20 to 50 points this morning. I wonder if that's on account of the action going on in the Gulf here. They could get quite a bit of rain in cotton country.
And it could be. A lot of Texas cotton is irrigated to begin with. So I think with some of the weather, at least it'll help them, keep them from having to irrigate as much.
And, of course, that's where they didn't get a lot of it put in the Panhandle area this year. Yeah, so it's something to watch, that's for sure. Stay right there. We'll come back and we'll talk a little livestock.
I'll look forward to it.
You can't wait to dig into that one. Chris Swift is our guest, and we'll talk cattle and hogs when we come back. And we're back with you talking with Chris Swift of Swift Trading Incorporated. He is right here in the studio, and we're going to take a look at our livestock trade right now. And first of all, let's go ahead and take a look at our live cattle futures. Well, Chris, when we opened up this morning, we were about 15 higher. Now we're about that much lower. August down 30 cents at 106.70, and October is down 17 cents now. We're at 107.90 per hundredweight. And I'd say it's about 60 cents off of our earlier high this morning. Now, the far-out deferreds, now this is interesting, far-out deferreds are still higher, about 20 cents. Now, if we roll over to the feeder cattle market here this morning, now the feeders with a higher corn market, they are starting to sag a little bit. We have the August down 70 at 138.13, and it's about $1 off our earlier high this morning. And September down 57 at 138.13. So lower across the board down the feeder cattle, and they had been higher earlier this morning by about 20 or 30 cents. Now let's look at the lean hog trade. What is it doing? Well, we are still higher across the board, so they are hanging on to the gains. August up 73, and now we're at 77.78, and we have October 70 higher at 70.78 per hundredweight. Okay, the cattle market kind of sliding away, and a lot of analysts were pointing at that one and saying, that one looks pretty impressive on the charts. And now it's sliding away this morning. What happened?
I think that probably Friday's employment report gave us our best clue that we have way too much meat protein. The employment report was very good. We had more people working out there, which puts more discretionary funds in people's pockets, and meat prices are still going lower. So I think we've got an overabundance of meat protein right now.
So we had the Dow earlier this morning down about 150 points. How much is that a factor here today?
I don't think it's much of a factor at all. We noted that the market seemed to be disappointed from the interest rates, from the employment report that we got on Friday, seemingly that they would not cut rates after they saw that report. So I think that made the equities market a little disappointed that it didn't get the shot of liquidity that it wanted.
So now we're only down about 90 points. So the Dow is coming back here as we speak here. Hog trade. Sharply lower on Friday, but now it's flipping that around here so far this morning. But does it need help to climb out of here, or what?
It's got to have something. With the last Hogs and Pigs report, we got 2% and 3% increases in all hogs and pigs on farm, farrowing intentions. So we're not slowing down pork production any at all. And we all are waiting for this magic portal to open up to start shipping pork over to China. And seemingly we're not opening that portal up fast enough.
A magic portal.
A magic portal.
So that's what we've been waiting on.
That's what we're waiting for, is a magic portal.
So that is the answer.
Out of it. That's it.
So I'll have to watch for that.
A waving of the magic wand.
If I see that. Now, the wholesale beef trade on Friday was quite a bit lower. Choice cuts were down over $1 on Friday. How much does that concern you now?
A lot, because that means we're having to lower the price of meat at the retail level in order to get it out the door. And we missed our grilling season. We talked about that earlier, that, we missed 3 really good opportunities of grilling season, and the next thing to look forward to is the doldrums of summer.
The doldrums of summer. Okay. So the feeder cattle market, we've been talking about that quite a bit here, with the corn higher like it is. Is it going to make it exceedingly hard to really rally this feeder cattle market, or not?
It will. The things that we're seeing right now is some of the spreads between front end and back end. The front end, because pastures are in great conditions, we're able to keep cows out on it longer, keeping them from. And some of the feed yards want some inventory to reload with, and they're having to pay a penny or two more for that in order to bring that inventory off of the pastures. But you look at the back months, they're still lower and spreading lower to the front end, because we know that once the grass dries up, there's going to be more inventory headed for the feed yards.
Makes you wonder what cash trade will do this week.
It'll be interesting to see.
Yeah. Well, thanks for coming in.
Absolutely, Marlin.
And welcome back. Good.
Thank you, sir. Appreciate that.
Chris Swift of Swift Trading Incorporated, right here in Nashville, Janet.
All right. As always, thank you, gentlemen, very much.